Okay, I'm gonna do an evaluation of um, of EA EURAUD pair. Okay, on my MetaTrader 4, I got an alert out that there's a 4-hour, a 17:05. It's 5:05 today. When the market opened, basically, EA issued a the TDI that I have 4-hour charts on the TDI with TDI running, and they have the alerts for divergences. And divergence, basically a RSI in the pair itself, and so it issued at 5 o'clock when the market opened. It issued a regular bearish divergence on EA. I'm going to come over to EA, and I know the time right now is 10 o'clock. Let's look for EA. Do we have EA? Yes, we do. Okay. There's EA. This is H1 right now. And it gave a bearish divergence signal. So what I like to do is I like to come over to the monthly and just see what's going on over here. And wow. Okay, so we have a range from here to here. Wow. That is something else. Right there. Wow. March 2020. COVID. Okay, so we have a range, from here to here. And let's see. Yeah, let's go. Okay, so high, low, lower high, lower low, lower high, shift. It came up, it didn't break this, it was dropping down, right? Well, yeah, it's hard to rise. It was in a downtrend on the monthly, but it just gave a shift in market structure. So let's zoom in. Okay, so get rid of this here. Okay. So we have a high, we have a low, swing high, lower low, lower high, higher low. Okay. So this is a shift in market structure, and there could be a possible break here. So the price came down here and swept underneath here. There's the lower consolidation area. Swept underneath here. Came up, struck this order block here. So I'm going to mark that order block out now. Okay. After taking, after sweeping underneath here, came back up, struck this order block here, and then dropped. And didn't make it that low, but body wise, you can see it did go underneath here, underneath these bodies. And started coming back up. There's Chuck here in this month, and then drop back down. And now we have this here pop out, and right there. And see what's the low on this one? 608. What's the low on this one? 655. And so far the low on this is 655, and the low on this 608. Right now this is an inside candle. The month just started, it's the 9th. Just took out the highs of these 2 months. Drop down. Okay. Okay, underneath this line here, the next significant would be this order block here. So this appears to be the start of this move here. So we'll have drop on the body of this one. I'm gonna drop a line here. Okay, hello everyone, I'm back. Okay, so this is the markup I had given. I had anticipated a drop down to this area here, didn't quite get there, and the price didn't rise up, and then to drop drop hard. It did not do that. It did. We do have this high, low, higher high. We do have this breaker here. This is a higher time frame breaker, but you know, it came price in any event. Price came in here, and there is no, I believe there was no news events or anything, and price did push its way through here, and is now consolidating right here. So yeah, it doesn't always go the way you expect it. But one of the things that you do see here, I know it's kind of sloppy. I'll go into a lower time frame and see it, but um, this institutional order flow entry drill did occur right here, where it was expected to occur at. Came up, tapped it, and dropped. Looking at the time of day, this is an hourly chart, and the time on this one is 10 our broker, which is the 3 o'clock. So 3 o'clock price struck here. This is 3, 4, 5, and 12. Let me see. This is, so where's the 12 midnight one? 12 over here. So this is the low here. This is the 12 midnight. So Asia low was taken out already during London. Price came up, struck here, and came down, took out the initial low here, and this is 3, 4, 5, 6. You know, by this time, with the rejection and break above this down close candle, break above it, more than likely I would have been pulled out. This was confirmed. Once price came up, it confirmed this order block here, bullish order block, and then price did come down in this next candle here. And what time is this one? 15. It was 8 o'clock at night. Made the pullback into this order block. I mean 8 in the morning. New York opened. The New York opened and made a pullback into this here, and zoomed out of there. And zoomed out of there. So, yeah. So, and price was below the 12 midnight. Opened, and it made the pullback. Came below it, and it went away. So, as we see here, my institutional order flow entry drill. I was going to put in an extra arrow here for entry at that point. You know why I didn't? But in any event, this would have been a loss if I would have put an entry here and then left it all day long, until this time here. Yeah, so I doubt I would have left it by what time it came up there to activate in the structure that is here already. Like, this is strong. Broke above, came down, bounced off of the order block, and then went up. This is all strong moves, and then it closed above this high here. So that would have been a no-go on leaving this in. So it wouldn't have been a loss if I would have came in and been watching the charts. So this here would have been canceled out. Yeah, so That's it. Okay, so now let's see the institutional waterfall entry. If let's see the work I started to do, should start it over. But so here, let me go in now. I had okay, so 15. So let's see now. Okay, so this was the institutional order flow entry right here, and so now, not so I could have entered right there, yes, but I like to look for confirmations lately, so I love to see the 3 candle pattern on a PD array. So we have a high, higher high, and this one here is low. This is the 15-minute chart, so I drop a fib right here, and then I go down to the and it shows you what time, 11 o'clock. Hopefully I got there. And then I drop down to the 5-minute. Okay, so something that I've been realizing and reminding myself is that pullbacks can occur within the 3rd candle. Don't, okay, so this here, this is the 11. This was the start of the 3rd candle. Okay, and then it's a 15-minute candle. So this started at 11, 5, 10, 15, right here. So within the range from here to here, the pullback had occurred and struck right there. How do we trade entry right there? We have a fair value gap here also, and then we have the this low right here. Let me move this here to see. Okay, good. Okay. So since this strike occurred at 2 a.m. is 9, 10, so 10:45. That's 3:45. So it's all within the kill zone for this entry here. Now, if I would have went in for an entry on the this is all for the 15-minute with an entry on the 5 after confirmation with the 3-candle pattern on the 15-minute. But we do see here 1, 2, 3. We have a 3-candle pattern even right here. So when price first struck there, and then when this occurred, came down here and then closed. This, once this closed, we can refine and go into this. So this is a 5-minute candle. So there goes the that's right on the, there you go, 10:50. So this is a 5-minute candle. So now we will go in to the 1-minute. Over here. Where is it? Cool. And here we go here. So 10:50 is there, and we're going off of the 5-minute 3-candle pattern. So that's 50, 51, 52, 53, 54, 55 right there. So the three candle, so the 3rd candle, This is the third candle encompassed. So that's the third candle there. And once that closed, it had already did, again, like I mentioned, the third. So the same way as on the 15-minute, the pullback had occurred within the third candle. That's what happened here. So once this new candle formed here, we see we have, so these up close candles here. I'm gonna go to the body, drop that down, come down to there. So it came up to optimum trade entry. You see that? Stop playing like that. So by the time this candle did form, 55 started, it jumped up and came and hit. Okay. The optimum trade entry for there. So that would have been so the stop would have been a few pips above there. This is a 1 minute, so 2 entry would have been here. And what else do you see here? You have a fair value gap. Yeah, to there. It came within there. Didn't fill it all the way, but it came into the middle of it. Consequent encroachment. So that would have been a 5 pip stop loss, and I'm targeting this low here, from this range from here to here, and we have it right there. So ratio, that's a 1, 2, 3 right there. So could have been a 3 to 1 already, just to get down, from here down to the symmetrical zone when you lower it. That would have been that. But you see, it actually got down like 40 pips all the way down here. We're going just for that swing there. Okay. Yeah, so knowing that, that's the go back to the 5. So knowing that in general you usually just enter right when price gets to the institutional order flow entry drill. You could just enter right there as soon as it hits it. And but if you wanted to, you could wait for a fractal to form and then go in for the work with the high probability scalping model. That's what that work would be in. And dropping the fib on the range of the third candle, sometimes on a swing within it, and then hitting in at a fair value gap and some sort of PD array on the pullback. You can get in on the pullback. The pullback runs into a PD array. Right there, that's the PD array you see. The price came back up, creating a PD array right here. Fair value gap. Have the volume imbalance there too. The spread could have covered that, but of course it's still a volume imbalance and it didn't go in there. But oh, this is EA. Oh yeah. Oh my goodness. Yeah, I forgot EA 1.4 or 0.8. The spread bouncing around. It's at a higher spread than EU or AU. So yeah, that spread. That means that the stop loss would have been higher than what I said, 2, higher than 3 to 4. So but you see, it just played out well. Another entry would have been, it would be put in, once it dropped down and came back up, would have been into this order block here. Price came, struck that, and continued down. So another entry could have been put in right there. And on the higher time frame, that would have been, the 5-minute one there. Yep, and that's it. And the entry, and just going to the low, the initial low, and that's it. All right, later.